Hey everyone, Dan here. We are after market close on Wednesday, July 14th. Today we're going to take a look at CCIV in advance of its merger with Lucid Motors. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you would like to receive a once or twice per week email newsletter from me with additional trade ideas, additional supplemental info and videos that I've done, or additional tidbits and doodads that I find as it relates to the market or certain tickers, please put your email in the Google form, which is linked in the description below. I'll be launching that in August, and I'll send out a note to everyone who's on the email list ahead of time, just saying, here's when it's going to start, here's some more details, and if you want to opt out, here's how you can do that. All right, so CCIV, obviously a lot of hype ahead of the merger. Merger dates apparently coming up here very, very soon. We'll get into some of those details shortly. What I thought we would do in this video is sort of take a look at the chart aspect and set potential price targets based on the chart and the trend analysis alone. And then I'd like to take a look at several pieces of data, market caps, valuations, and short interest to sort of come up with some additional info and additional price targets based on those things. This is to hopefully provide you with some info, some details that you can use in order to, do your own DD and make your best decisions moving forward, because I know there's a lot of hype around this one, and that can always be a little bit dicey. So what we have here to start off with the chart side of things, I have a fib retracement from, this near bottom at 996 before the run up to 64.85, and the retracement level is coming back down. So you see it, even though this was like an incredibly painful drop off, it stutter stepped here around the 618 and then fell down and found some support around the 786 level, and then basically hugged that all along. It did dip quite a bit below it, for a period of time here, about a month or so, but then ultimately was able to get support back over it, and it didn't really threaten to come down below that $10 level and do a full 100% retracement. So held much closer to the 786 than the 100. So I also want to supplement that with, so that's sort of like the broader fib that we'll leave in blue. I want to look also at the shorter term fib, which is this run up here from 1697 up to 2981. So let's grab that. If I can get my cursor in the right place here, and we'll make this one yellow so that we can distinguish between the two, just to sort of see a couple of things, see where some of these spaces overlap, and also then we'll compare them to supply and demand zones. So you see where the 786 sits right now would be the 661.8 retracement level on this shorter term fib retracement level. Now, based on sort of some of the price action currently, obviously it retraced to this level, but it was before it had peaked out. So I would ignore this sort of test of 618. What I would anticipate from a charting perspective would be that there's strong possibility that it comes down to this level in the near future, this like 21-ish dollar level, right around here. And then I would also not be surprised if then it followed on coming down under this $20 level, which would put it, right around here. So just from a charting perspective, that's what I would anticipate. Also, there's just a lot of support and resistance zones that line up as you scroll back with these price targets as they pertain to just previous support and resistance zones. So when the previous support and resistance lines up really squarely with current and historical fib retracements, oftentimes those are very, very strong zones. And you see that is both the case at this like 71/2187 level, but also then down here in this 1972 level. You have all of this support here. You have resistance at that same level here, support at that same level here, and then 1972 over here was right about in this zone where you caught some support here as it was trying to dip back down, and then it bounced up off of that. So I would look strongly at those zones. Now, if it would fall then further and try to do a full retracement down to this like $16, $17 area, I wouldn't necessarily deduce that from just this alone, but I would say that these like under $20 price levels are quite likely based on the chart. And also, there's sort of like a couple of things at play here. The one possible saving grace that could keep this from falling, and I'm talking about near-term stuff here, so if you're sort of like, getting very concerned at the moment, hold tight, because these are very, very near-term things. So we'll talk about longer-term price targets in a second. I think we need to distinguish trading, which I would consider shorter-term endeavors, from investing, which I would consider, several year-long endeavors and price targets and things like that. So right now I'm talking about trading. So you have this sort of like double bottoming out zone, and then at the same time you have this pretty oppressive, just because it's very, very steep, down trend line that we have right here. So these couple of things in play, if it does bounce off of this purple zone here, which is where it is right now, it would be really interesting to see what it does as it hits not necessarily this 382 level, but more necessarily this steep downtrend line. Because this downtrend line would take it right down through these lower fib levels. Where then it could try to catch support at those zones and work it out from underneath that downtrend. But as it looks to me now, it could have the possibility to bounce off of this double bottom. But if it can't, and it can't hold this 23.39 level, then I would expect it to get shoved down further underneath this downtrend line, pushing it down further. So that's what I see on the charting side of things. If we want to take a look at the indicators, very, very low on the RSI, so that would indicate that there is the potential for some calling back and some buying strength to come in. That said, when we see these sort of like oppressive downticks like you saw down here, it can spend a lot of time in oversold or nearly oversold territory and then barely rise up, not even reaching the midpoint, which is 50, and then coming back down into oversold again. And then even here, when it did come up to overbought territory, it only put that price then back at the same zone that we see here, where it was, at about 40 on the RSI. So, 70 plus on the RSI equating to 40 on the RSI just sort of, a couple of weeks prior. So the run-ups at that point don't really do much to change the trend, especially when they just come back down and immediately oversell again, and they don't even do sort of like this subsequent running up into overbought territory. So that's what I would be on the lookout for here. Does this sort of try to push up a little bit off of this oversold area, but have a hard time coming above the midline, and then just keep kind of getting repeatedly pushed down toward or into oversold territory, therefore bringing the price down further. On the MACD side of things, you do see quite a bit more bearish momentum at play versus the bullish momentum. So it was a nice swing here MACD wise, but if you look at the histogram, large bullish area here, large bearish area here, which was then even overcome by this bearish area was even deeper than that one. So this would indicate to me that there is additional bearish momentum coming into play, whereas the bullish momentum, definitely not as significant as the bearish momentum, and also from this area to this area, is trailing off or dying down. So it appears as though bullish momentum from the 4-hour time frame continuing to whittle down as the bearish momentum stays strong / even picks up a little bit. On the MA side of things, it's trying to catch itself right now at the 200 MA. So that's sort of like, a I don't want to say a final bastion of hope because that's so hyperbolic, but that would be sort of like the last place for it to try to catch support from the MAs before it's then going to fall below all of the MAs and then just have to sort of encounter them to the upside as future resistance. So I guess I'll put it that way. So definitely sort of bearish indicators there. So that's what I would look for sort of like on the trading side of things. Now, of course, trading shorter term catalysts can come into play and sort of throw things into, a wide array of wackiness. But, this is what I would see just based on, where the trend currently sits. Now, let's sort of flip over and look at a couple of other things. Let's look at the short interest for Lucid / CCIV because that's sort of like a short-term type of thing. And you see here the days to cover rising quite a bit on the green line there, and then the exchange reported short interest, spiked up quite high and then pulled back just a smidge. So I mean, the pullback to me isn't much of anything based on the large increase in the short interest that we've recently seen. Now, Ortex today reporting an estimated short interest percentage of the free float being about 17.68, which is pretty high. Definitely, if it were to get over 20, then it would be, pretty severely high at that point. The thing that is severely high here, though, is the utilization. So you see here, utilization is nearly 100, and 100% means that all the shares available to borrow or lend at a lending program have in fact been lent. Now, we've seen this happen before with SPACs that are about to complete their merger. We saw it with IPOE going into SoFi, where utilization gets very high. There's a lot of short interest, a lot of short pressure on the stock. And what we then tend to see is the fails to deliver spiking just before the merger date. So that would be something to keep an eye on. Are there potentially is there potentially naked short selling happening ahead of the merger because there's so much short interest, there's so few shares to borrow, and so that sort of like incentivizes some broker dealers or bad actors to make some poor choices and short sell naked, I guess, phantom shares into the market. Now, this is sort of further supported by what we see from yesterday into today. So yesterday on the 13th, we see closing out from Interactive Brokers about 300,000 shares available to borrow, and then almost all of them coming out immediately this morning. Now, a little bit of closing out this morning, pushing it back up to 15K, but I mean, that's just a fraction of what there was available last night, and then staying extremely low throughout the day today. And the fee, while it's, 6.7, I mean, it's still, really, really low. We'll just get the updated data here. I mean, just at close, there was somebody who grabbed almost all the available shares to borrow and then short sell into the market, still. So, the shorts seem to be very, very keen on sort of targeting CCIV as this merger takes place. And, we'll talk about why more in a minute. I don't think that it's just necessarily because of the trend. I do think the trend is pointing us more downward than upward. But, we just covered that. So, so that's the short pressure as well that CCIV is going to have to deal with as it makes this transition to, I guess, LCID with the Lucid merger pending. Now, let's flip over to some of that information and talk about sort of like where things could or should settle over time. So this is more of like an investment kind of outlook on things. Now, the closure date, from what I'm still finding, set to be July 23rd. So then the ticker will change, and a bunch of things will happen. Ticker will change. There will become a lot more shares available in then LCID in Lucid, and then will come sort of like the ticking, I don't want to say ticking time bomb because that also seems too hyperbolic, but there will then become the waiting factor of when the lockup period expires, when sort of pipe investors and other folks who have shares that are locked up can start selling those onto the open market, creating additional selling pressure, and what that could look like as things roll out in the coming weeks and months after the merger dates. We'll do a future video on sort of what those lockup dates look like and the expiration timing. So I found several places where this is sort of reported. So I wanted to start here in terms of like longer term forecasts, what we could look for in terms of where Lucid's price settles after the merger. So based on these filings that we have right here that were done, obviously this one was done in March, and then this one was part of a deck and that came on in May. Let me scroll back down here because we'll talk about this in a moment. But several places I see reported that's though I think it's all from the same source, so keep that in mind. But it appears as though the pro forma market cap of Lucid is 31.7 billion. So that's based on the filings, the data that they have, and then the investments that are being made ahead of the merger. And that is the information that's contained in like this SEC filing and then in the analyst slide deck that they've linked. And so let's keep in mind this 31.7 billion. All right, now coming over here, again, keeping in mind sort of like the company's prospects as time goes on. CEO, CTO Peter Rawlinson from Tesla. There are a couple of other folks on the leadership team from Tesla. I think that's been well documented. Previously. And then, this is just sort of like pedigree stuff, like where folks have come from, obviously a bunch in the automotive space, and then for their CFO, previous treasurer and head of investor relations at Waymo. So, just sort of like touting the pedigree of the leadership, which, does seem to be relatively strong and in place. And then there are several interesting key figures here. So Lucid Air Dream Edition is now fully reserved, and total air reservations are above 9,000. Okay, so keep some of these like delivery numbers in mind, because those will be sort of like what the company is judged on for quite a period of time moving forward. I mean, we see this coming up with Tesla, we see this coming up with NIO, obviously like XPEV and Lee and these companies, the dates at which they report the delivery numbers, those are hugely important times for how investors are perceiving the value of the stock moving forward. So let's take this 31 billion that is being sort of published several places here, and let's compare that to, now I think it's, to be honest, I think it's pretty out of whack and disingenuous to try to compare this in any way to Tesla for now. And I think it's out of whack to compare it even to NIO, because those companies, from my perspective, and maybe you disagree, but I see them as being just so far ahead of where Lucid is at this point, that it's hard to compare market caps to those companies and say that you can really glean something from them. Lucid has a lot of things to prove, in sort of like what they're presenting in these investor decks, like we have this many reservations, these are supposed to be delivered and by X time frame, and we have manufacturing expectations of Y, and the degree to which those are met and then even sort of superseded and outpaced, those will be the future drivers of that price. But for the time being, they have a lot of work to do of just proving these sheer fundamentals that they can deliver on anything that has been pre-ordered or manufactured or designed or set to be built. So 31 billion going into this, and if we come over here, and I think there aren't great analogs because of, like I said, just the difference of stage, but I did pull up XPEV and Lee just because I think that there's a couple of kind of slight analogs here. So XPEV and Lee, both companies in China, so they have a little bit of that sort of like China FUD that plagues them, and I think by the same case, Lucid will have the SPAC FUD that we see plaguing basically everything that comes out of the SPAC world at this time. And And so I think that's sort of like semi-analogous. And then XPEV definitely not as far down the like life cycle line as NIO and Tesla. And so I think they're a little bit further in. So I think taking something around half of their market cap as like a solid place to pin Lucid until it starts to prove out some of these projections that it has and expectations that it have is probably fair. So XPEV sitting at 26 billion on the market cap, and Lee sitting, I believe, at 25. Yeah. So I would say there we're pinning about 12.5 to 13 billion on the market cap side of things. Now compare that to the 31.7 that's being reported, and you have a situation where this would be down about 2.5 times. Now, I think we need to see as sort of just the dust settles and things kind of shake out post-merger, and the factor in which all of the available shares come into play, and we see that market cap kind of crystallize around where the investments have come in and the amount of available shares in LCID versus CCIV, which again is the SPAC, is the blank check company, just has the 6 billion market cap. So this is not me saying that I think CCIV's price should double. This is me saying that if that 31.7 billion post-merger, and this will be known really quickly, proves to be correct, I would be looking to take LCID's market cap to about 12 to 13 and whatever price is indicated by that. And we'll do a follow-on video right after the merger as soon as that market cap starts to become clear, and sort of see what that means. Now, if that means that this needs to be about halved or something, sticking it around 11, 12, $13 a share, then that could end up being the case. But I think it would behoove everyone to just wait and see how the shares and the share price sorts out in the first trading days of Lucid. And in those first trading days, again, trading days versus investing days, play something more like the trend, the chart, which I think is more applicable to trading. And then that will give us the investment kind of horizon that we can be looking at. That'll give us the necessary info, such as the market cap, as it sorts out and it settles and the shares become available. We say, okay, so here's how many shares LCID is going to have available. And just sort of like stop trying to speculate based on the filings and, what's sort of like all of this pseudo legal type language, like mixed with finance language in all of these filings that are hundreds of pages long, trying to decipher that. I think, again, trading based off of charts in the initial trading days, very fair. And then when the dust settles and you have the necessary info for making smart investment decisions based on valuation of the company, the market cap of the company, once we have the number of shares that are out and then the price at which it's trading at that time, I think then we'll be able to make a better decision of, okay, so here's what the price would get to if we're getting ourselves to 12 to 13 billion dollar market cap. Now, I think that is a short-term investment range. I think that that's something that should be strive for from Lucid, just hitting those initial markers, and sort of like emerging as a strong American EV company. That should be something that should be attainable, I would think, in the first year or so of trading. On the 5-year horizon, I would definitely look for it to overcome the XPEV and the Li, and be pressing more toward the NIO side of things, which would put it, and I'm talking about NIO today, which would put it more in the $70 billion market cap range, something in the 5 to 7 years down the road range. So if it does come out of the gates and can settle into that $12 billion market cap range in the first year, then we would see it about 5.5, 6xing over then, I think, the next 4 to 6 years. So it would put it 5 to 7 years post-merger, if that makes sense. So that's what I'm going to be looking for. But I do think, again, having gone through several of these mergers and just kind of seeing how messy they can be with the documentation and trying to work through what's happening when and get the timing right. I do think that there's value in trading in the short term, figuring out what's all of the numbers and the details look like after the dust has settled, and then say, okay, investment wise, here's what I think this looks like based on the market cap and knowing the shares that are out and available and that sort of thing. Okay, this was a very long video, but I hope that this gave you some info to use. But yeah, I do see short term as we get into the merger here, the price being pushed down based on the chart alone. But if I'm wrong, I'm wrong, and kudos to the CCIV/Lucid bulls in the short term. And I'm definitely not a bear. This is just me kind of deciphering what I see on the chart. All right, well, thanks a bunch for watching. I appreciate it. I hope you're having a good trading week, and I will see you in the next video.